June, what do you see about to unfold in Asia, particularly if you're looking, say, at the ASX Australian stocks, looking ahead to the Nikkei and the Kospi? Is this kind of run from risk that we saw starting Friday, going over the weekend with Bitcoin, going to continue?
Yeah, look, absolutely. At this point, interesting enough, Australian future market is actually pointing to a positive start. But look, we don't think that will hold on for long. We expect the risk of sentiment continue to ripple through all the Asian markets. And the key is, as you point out rightly, that it's the expensive, the tech, the growth stock will be sold off far more than the rest of the market. So we expect to see the gyration between value and growth to take place certainly today.
Well, Jun Bei, how long is this going to continue? Is this just a, people are sort of one thing led to another, right? In the U.S. it was, the payrolls were weak, but unemployment fell. So there was gyrations at the open. Stocks rallied, they fell back. The China tech stocks fell. Again, is it something that we can quickly shrug off, or is it the beginning of a trend, do you think?
Look, I think it's you're absolutely right. I think this is something that we will shrug off soon, because when you think about what the market is worried about at the moment, seems to be about everything. There is the inflation. We worry about the inflation, and then we worry about the interest rate might go up too quickly, and then we worry about hang on, the Omicron might affect the growth prospects. So all these conflicting factors market is worrying about at this point. My view is that look, market has done very well so far this calendar year. People are taking some money off the table because we're heading to Christmas and the like. So there is a bit of outflow out of the market. Hence, the thin volume is driven bit of market jittery, certainly at this point. Look, ultimately, interest rate will go up, but not as quickly as we think at the moment. And we think that the Omicron, what market has done with previous variants of the COVID, has seen has managed to shrug off a lot of those previous impacts. So we think we'll do the same for this version, this variation as well. So, just take a step back, let the share price come to you as an active investor, take advantage of the opportunities.
Let the share price come to you. Jun Bei, is China a bigger concern, though, for investors in this part of the world, particularly as we await the restructuring news out of Evergrande?
Yeah, look, it has been for quite some time. Certainly China being the second largest economy for the world, in the world, that slowdown in China does drive the future prospect. But that has been in estimate and in motion for, since beginning of this year. So most of the estimates are reasonably conservative in terms of growth. Now, the restructuring of Evergrande, we think it's a path it needs to retake. It's a path it needs to take. But I think the ramification for the rest of the world in terms of flow-on effect and things is minimal at this stage. Ultimately, China is, restructuring a lot of its sectors at this point. And next year, we do expect, easy sort of condition in terms of monetary, in terms of credit condition should be getting easier. And then plus there will be a little bit of stimulus to get the economy going again early next year.
When it comes to the RBA, though, there seems to be this sort of kind of credibility gap, if you will, or at least disbelief in what the RBA says and what you see the markets and traders pricing in at.
Yeah, that's right. It's interesting, isn't it? Look, RBA, as similar to most other central banks, want to express that they have. Everyone should believe that they will have our economies back. So they will keep the conditions easy enough so that we recover from this health crisis. However, the bond market, there's a lot of flow into the bond market. It is putting a lot of pressure for the rates market. If they are going to control the yield curve. I think ultimately interest rate will have to go higher at some point because we are still at an emergency level because of pandemic. So in the next 12 months, you should expect the rates to start going higher, beginning with the tapering and then a little bit of rates. But that's nothing to cause alarm. It's just really going back to a more normalized level. We're still significantly below what the interest rate was before COVID.